Hello, this is Mark Wakefield. I'm excited to share a few minutes with you discussing organizational vision and mission statements. Strategic planning is imperative for any organization. While there are different approaches that may be taken, there are 6 major components that should be considered. These components include mission statement, vision statement, organizational values, goals, objectives, and action plans and initiatives. This presentation is going to look at 2 of these components that will help lay the foundation for the rest of the strategic plan to be built upon. These 2 components include the mission statement and the vision statement, and may be summed up as the organization's vision and mission. After defining them, we will also review how these 2 are connected. We will then shift gears slightly and look at tax exemption and what could jeopardize a tax-exempt status. The mission statement explains the purpose of the organization. In other words, it explains what we are now. Generally speaking, the mission statement will cover a future period, usually one that does not exceed 5 years. Another way of looking at the mission statement is that it concentrates on the present. It defines the customer's critical processes, and it informs you about the desired level of performance. The vision statement explains what we want to be, or what we aspire to be. It is a look into the future, perhaps 10 years from now. This may or may not be a publicized statement. The vision statement focuses on the future. It is a source of inspiration and motivation, and often it describes not just the future of the organization, but the future of the industry or society in which the organization hopes to effect change. And in healthcare, this is a crucial piece of information. Many times an organization will summarize their goals and objectives utilizing the mission and vision statement. However, it is important to understand the difference. The following slides will help break each one down and explain how these 2 components are connected. A mission statement talks about how you will get to where you want to be. It defines the purpose and primary objectives related to your customers' needs and team values. A vision statement outlines where you want to be, communicates both the purpose and values of your business. A mission statement answers the question, what do we do? What makes us different? A vision statement answers the question, where do we aim to be? A mission statement talks about the present leading to its future. A vision statement talks about your future. A mission statement lists the broad goals for which the organization is formed. Its prime function is internal, to define the key measures of the organization's success, and its prime audience is the leadership team and stockholders. While a vision lists where you see yourself some years from now, it inspires you to give your best. It shapes your understanding of why you're working here. Your mission statement may change, but it is still tied back to your core values, customer needs, and vision. The difference with a vision statement is that as your organization evolves, you might feel tempted to change your vision. However, mission or vision statements explain your organization's foundation, so change should be kept to a minimum. When developing a mission statement, ask, what do we do today? For whom do we do it? What is the benefit? In other words, why do we do what we do? What, for whom, and why? When developing a vision statement, ask, where do we want to be going forward? When do we want to reach that stage? And how do we want to do it? Finally, remember that a mission statement provides purpose and values of the organization. Who are the organization's primary clients? Stakeholders? What are the responsibilities of the organization towards the clients? A vision statement provides clarity and lack of ambiguity. Describe a bright future, memorable, engaging expression, realistic aspirations, achievable, and a vision statement aligns with the organizational values and culture. Here's an example of a mission and vision statement from Centura Health. Their mission is, we extend the healing ministry of Christ by caring for those who are ill and by nurturing the health of our people in our communities. Centura's vision is every community, every neighborhood, every life, whole and healthy. Mission and vision statements help establish an organization's culture. For healthcare leaders to be successful in the present and future, it is not a matter of white-knuckling or holding on tight through change. They need to harness the power of the people who represent their culture. Now, culture can seem like an inconvenient truth because it can feel messy, it's abstract, it's difficult to change. However, it has been suggested that leaders should pay attention to the cultures they are fostering to achieve performance gains. For those who have sought care and been met with employees and providers who have palpable energy, demonstrate compassion, and go above and beyond, those individuals meant difference between a good or bad experience. And this is how a healthcare organization will have an impact on their community. Now let's shift gears slightly and discuss tax exemption in healthcare. Why are tax exemption organizations formed? Tax exemption organizations are established and operate solely for charitable, religious, educational, scientific, or other nonprofit purposes. Because of the perceived benefit to society, these organizations are relieved of liability for paying federal and state corporate income taxes, and typically state and local sales taxes and local property tax. Since the 1950s, the Internal Revenue Service has recognized nonprofit hospitals as qualified to be charitable tax-exempt organizations. So what does this mean to healthcare? A hospital, clinic, or other similar healthcare provider may qualify for tax-exempt status under IRC 501(c)(3), provided it is organized and operated exclusively for charity purposes. To qualify for a healthcare provider that promotes healthcare as its charitable purpose, the organization must meet the community benefit standard described in the rule listed at the bottom of this slide, as well as other requirements of IRC 501(c)(3) and its regulations. However, understanding the importance of tax exemption status and its benefits must not be lost in what happens if an organization loses its tax-exempt status. The Patient Protection and Affordable Care Act, also known as just the Affordable Care Act, imposes 4 new requirements that Section 501(c)(3) hospital organizations operating hospital facilities must meet to keep their tax exemption status. 1. Each hospital facility must conduct a community needs health assessment at least once every 3 years. 2. Each hospital facility is required to adopt both a written financial assistance policy and a written emergency medical care policy that comply with certain statutory criteria. 3. Hospital facilities may not charge patients eligible for financial assistance more than amounts generally billed to insurance patients, and are prohibited from using gross charges for patients eligible for financial assistance. And finally, hospital facilities may not commence certain extraordinary collection actions before making reasonable efforts to determine if the patient involved is eligible for financial assistance under the financial assistance policy. These requirements were added to the IRS code under Section 501(r). Failure to meet these requirements can have significant consequences ranging anywhere from $50,000 excise tax for each hospital facility that fails to perform a timely community health needs assessment and adopt a corresponding implementation plan to taxing all of a hospital facility's revenue for one or more, to loss of exemption status for that hospital organization for the interest in its bonds. If the hospital organization is part of a joint venture that operates one or more hospitals, Section 501(r) can apply to those hospitals as well. Now, one cannot talk about a vision without turning to scriptures for guidance. And P.K. Bernard once said, "A man without a vision is a man without a future. A man without a future will always return to his past." It's important to understand what we're doing and create a vision to stay ahead. Vision is the bridge between the present and the future. Without it, we perish or go unrestrained, as the New American Standard Bible puts it. Vision gives pain a purpose. Those without vision spend their lives taking the path of least resistance as they try to avoid discomfort. The level of sacrifice that a vision requires will determine the size of people who follow. Sacrifice separates the small from the great. And it's nice to understand the words in Proverbs 29, verse 18. When there's no vision, the people are unrestrained, but happy is he who keeps the law. This presentation took a look at the components that help lay the foundation for the rest of the strategic plan to be built upon. These two components included the mission statement and the vision statement. After defining them, we reviewed how these two are connected, provided an example of what these statements may look like, and reviewed how these statements impact community outcomes. We then shifted gears and looked at a brief tax exemption, why tax exemption organizations are formed, what tax exemption means for healthcare, and what could jeopardize an organization's tax exemption status. Thank you.